Guys, PayPal stock was big last week. It was a very popular video for our channel. We got a lot of requests for a follow-up this week. Remember, on this channel, we're trying to show you guys how when you buy a stock, you're buying a piece of a business. And that in the long run, the fundamentals of the business are what's going to shine through. You know, I was on Twitter this week. We posted about PayPal, and I got a lot of comments like, love PayPal. Then a lot of comments of people saying, I need to see X, Y, and Z happen. Guys, this to me is proof that people focus too much on a story. Yes, the story is important. Yes, the numbers are important. Putting them together is very, very important. But I want everybody to remember one thing specifically. When we pull up PayPal stock in our software, there's a reason why we put the all-time highs right here. 310.16, a little over 2 years ago. Literally 2.5 months ago, 2 years and a half month ago, and recently hit $59. And today, it's at $63.50. Are you possibly telling me? This is what this means. When it was all-time high of 310 and such a big difference, people thought PayPal could not fail, could not do poorly. And guess what? Revenue and profits up since this all-time high. And yet the stock is down 80% almost on the nose. Why is that, Mo?
Story.
The story. And guess what? The news follows the stock price, not the other way around. Remember what I'm saying there. What I'm saying there is the stock has fallen precipitously, and now the news about the company is, oh, there's so much competition. And guess what? There is a lot of competition. But the question is the competition that big that PayPal can't still grow as a company? Mo, you did the earnings release last week. You showed growth in revenue, in profit, in transactions, in transaction value.
Yeah.
How is this a company? Yeah, everything was growing.
Yeah.
Don't get me wrong. And by the way, they own Venmo. I literally, somebody wrote on there like, I never used PayPal. I'm like, really? I use PayPal every freaking day.
Yeah.
Or Venmo every single day. Literally, my fiance is in the living room yesterday. And I said to her, hey, you bought something using my card. You had to use your own money. Venmo me the money. And she did right then and there. And there's the money in my account. Done. And then she had to pay somebody for something. And she goes, oh, is this my account ending in blah, blah, blah? I go, no, that's my account. She goes, oh, whoops. But the whole point was we were literally sitting there talking about our budget for the month. And I said, hey, you owe for blah, blah. Okay, done. And she did it in a matter of seconds. That was it. Done. And I look at PayPal and I look at how much people love the company and trust the company. The big thing for me is the trust, Mo. Mo, when you're buying something overseas, what do you pay with?
PayPal.
So do I. I pay with PayPal through my credit card. I don't even want to deal with that because I know PayPal is very pro-consumer. So I want you to remember that on this channel. This channel is about looking at the companies, and I own PayPal in full disclosure, but it does not mean you should go buy PayPal. We're here to teach a process, and that process can be applied to every sort of investment in the world, no matter what it is. And you might not see the story. By the way, people were mistaken. Mo's not pro PayPal. Mo doesn't think it's a buy like I do. I don't think you even have shares, do you?
No.
Mo doesn't have shares, I do. So here we are on the channel, we talk every day, and we have a full disagreement on the company.
Yeah.
That's what's interesting, and that's okay. I don't see Warren Buffett owning PayPal, do you?
No, not to my knowledge.
Yep. I have great value investors out there who don't own PayPal. And the other key thing is, guys, by the way, for those of you trolls out there, I'm actually up on my PayPal investment, but not that it matters. But I just want to point out how factually incorrect you guys are. Factually incorrect the trolls are.
I love the trolls.
But guess what? I fully expect PayPal to go lower, and I fully want it to go lower. I currently believe the market is very overpriced, and any sort of major downturn will affect all major companies, especially the big ones. This will not be excluded. But guess what? When you buy with the right process and you understand why you're buying, if the price goes lower, what are you doing, Mo?
Buying more.
And I want you to have that confidence.
And the funny thing is, you just said this will not be excluded. This will absolutely be included because it went from $310 to $59.
When the market was up.
This is a big piece of the tech industry.
I just look at this and I think to myself, guys, you're never going to buy at the bottom. And you should never, the difference is when I criticize those other YouTube hypesters out there for their stocks being down 80, 90, or 100%, which has happened a lot. When I criticize them, it's because they don't have a process. That's the issue.
They have a story to base it off.
They have a story only. And as Professor Oswald said in our interview last week, a story without numbers is just a fairy tale.
Literally the story, one of my favorite almost fairy tales is Peloton.
Oh, yeah.
We were saying that, okay, people are home using bikes and treads at home. This is going to replace gyms. Do you know how ridiculous that sounds? Even in the moment, it sounded ridiculous. But that's the kind of story that you put forth, is this is going to replace gyms.
When I hear those extreme statements, that's what makes me go, hang on a second. Like, could it be true? I mean, look at it. I'm sure somebody back when iPhone came out said BlackBerry is dead. I'm sure somebody said that. Okay, but how many times have things been said where it didn't actually happen?
Yeah.
Usually that's the case. And by the way, it still took a few years before that even happened. I didn't have an iPhone until 2011, 2012.
Really?
Yeah.
Wow. Okay.
Hey, when are you going to get on the WhatsApp bandwagon, you idiot?
Ugh.
WhatsApp is 10 times better than iMessage.
Don't even get me started.
1,000,000 times better than iMessage. Hey, Nick, get on WhatsApp and I'll never give you shit anymore about having an Android.
I will.
Deal.
I will.
Tim, let's get on WhatsApp. I think WhatsApp is a way... WhatsApp is... No. By the way, once you use it, WhatsApp is 10 times better than iMessage, and the searching and it's way better.
I used it, and I told
Nope, it's better.
So I'm not...
It's better.
I'm not disagreeing that it's better, not better, whatever. We have so many apps for messaging now.
You're right, but that's why WhatsApp is so great. By the way, we're on PayPal video. I'm talking about WhatsApp.
Yeah.
The search on WhatsApp is 1,000 times better than iMessage. 1,000 times better.
I don't need to search. I keep everything in my brain.
All right, so back to PayPal. Guys, let's go through some of the things about PayPal. Look at the 8 pillars. The only X we have is the cash flow growth, which is important, guys. Very, very important. But it's still something that I want you guys to remember. It doesn't mean just because there's so many check marks you should buy it. It just means this tells a story, and the story is that things are looking pretty good. The one thing I do like is their price to free cash flow is lower than their price to earnings. They're reporting more cash flow than earnings. Usually it's the other way around. So I kind of like that. Decent return on invested capital. I wonder how much of this is lower because of the fact they're still a growing company. Buying back shares. I hope a lot of these shares weren't bought at $300 a share, because remember, buying back shares isn't always a good thing. If your company is buying back shares of overpriced stock, they are hurting you as an investor. That's always a concern I have. It's always a big concern. What was that, Mo?
I'm going to look back at that.
Oh boy, I'm scared to see this.
I'm just going quarter to quarter.
Mo, do you realize the market cap on PayPal at one point was $300 billion?
Wow. No.
Because look at it. It was 5 times greater, $400 billion. And now it's a $70 billion company.
Well, you will be happy to know that they were not.
Really?
Yeah.
They were not buying during the peak?
And they started buying in first quarter of 2022.
Wow.
Yeah.
Where was the stock then? First quarter of 2022? Okay, it was still a low of 95, a high of 196. Okay, so it's not terrible.
Yeah. Wow. Good for them.
Yeah, guys.
See, that makes me think, okay, management has a pretty good clue of what they're doing.
Better clue.
I
still think buying at $150 a share is still a lot of money based on our valuation.
Right.
But guys, again, going back to this, analyst estimates. Again, analysts should be taken, they have their biases involved, but look at this growth. It's still growing earnings per share every single year, according to your analysts, and by double digits every single time. Look at revenue. This reminds me a lot of Microsoft. Oh, it's a dying company. If it's dying, why is everything getting better? Why is revenue getting better? Why is profit getting better? I don't get this. And some people aren't saying it's dying. Please. And there might have to be more people that give up on PayPal because it falls to $30 or $35 a share. I don't know where it's going to end up. All I know is that for me and what I'm trying to teach on this channel, what Mo and I are trying to teach on this channel, is that if the stock price is below what you think intrinsic value is, with enough margin of safety where you can be wrong in a few things, you're going to do very well. If you apply that to 15, 20, 30 companies, you're going to do very well.
Mm-hmm.
That's what's key.
Yeah.
And PayPal, to me, is a company with the beginnings of a very strong moat if it's able to continue to grow and become immersed in everyone's life. It is a very reliable payment processing company for people. If I'm in the US buying something internationally, even in the US buying something in the US, I would love to use PayPal.
Sorry, we're getting
It's not about, we're not sitting here and saying that you should buy the company. Do your own investigation, do your own research. If you don't feel comfortable with it, you don't buy it. We're trying to teach a process. But if you do decide to buy it because you like the company, independent of what we're saying, you've got to be ready for the stock to fall. That's why it's important for you to understand the fundamentals of PayPal and realize that you're buying for the long term. So if it falls even further and the fundamentals are still in place, you buy more. And guess what? There's going to be a lot of news out there when things go bad. This thing sucks. This thing, maybe it does. Remember, even the best value investors are wrong 40 or 50% of the time. But the point is, if you buy a growing company at a reasonable price, you're probably going to do very well as it grows.
Yeah.
So before we go, I want to make sure we use our stock analyzer tool, because the one thing we've seen from our PayPal video is a lot of the viewers are new. And if you're not new, it's still a good way to refresh yourself on the stock. Now, if you have our software, obviously you've probably run stock analyzer tool on PayPal. But here's what we do for stock analyzer tool. It's the most popular part of our software. Our long list of tools in our software that you can have for a little over $1 a day at EverythingMoney.com. It gives you all these options, but the stock analyzer tool is so popular. Over 2 million times it was used since it came out, because you can analyze between 1 and 20 years. And the very first thing in here is revenue growth assumptions, guys. I love when I get criticized saying, Paul doesn't understand revenue growth. Oh, really? Then why is it the first line of my stock analyzer tool? And guys, this is the software that Mo and I use every single day. We didn't just make this. We created the software because it was an Excel sheet before and people wanted the Excel sheet themselves. So we made it in the software. It has the data feed and everything. So we have revenue growth, we have profit margin, we have free cash flow margin. We assign a price to earnings ratio and a price to free cash flow ratio, and then we finish it with a desired annual return. Now, I'm going to pull up in our history, which you can do with our software, on PayPal from the other day. That way, we're very consistent. This is exactly what we did last week in our PayPal video. We did low, middle, and high assumptions on revenue growth of 4%, 7%, and 10%. What do you snap your fingers for, Mo?
I was going to put in 4, 7, and 10, and I wanted to see what we put.
So guys, what we're doing here is saying, listen, 4%, guys, it's growing internationally. The world grows. I'm looking at going, this should be like a very stable, low, should be their baseline.
Mm-hmm.
7%, okay, it takes a little bit more effort, but I definitely think it's probably what they're going to hit. And 10%, and it crushes their last 10 years have crushed that. But we don't want to assume the same growth for the future as it had in the last 10 years. Could it still beat this? Absolutely. 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 Now, profit margin. Very consistent profit margin. Very consistent. But we're going to go a little bit lower. 12.5, 16.5, 20.5. Now, you're probably like, Paul, why'd you go so high in the middle? Because their gross margin is 50%. That means for every extra dollar they sell, 50 cents of it can go to the bottom line. So as they grow larger and larger, they're probably not going to need more staff and more overhead. So that profit margin probably going to go up higher. Free cash flow, same thing. But I actually did a little bit higher on the free cash flow, but over long periods of time, guys, these should come together. Now, the price to earnings ratio and the price to free cash flow ratio. We put 14 on the low side because there's some competition there, but we already beat the company up. And we put 17 in the middle because as it gets larger and larger, that moat's probably gonna be better. And we put 20 on the high side. If it does these big growth levels, it's gonna be a much bigger moat company. Wouldn't you agree, Mo?
Yeah, definitely.
And that's why we assign such a high PE to it. Because on high PEs, it should be based on moat, return on invested capital, revenue growth, et cetera. And I think as the world gets larger and larger and PayPal does a better job of being the go-to, this will become better. Now, finally, guys, we put our desired annual return. Remember, you can get 9 or 10% from investing in a long-term ETF. And the bigger and bigger the company, we're okay getting a lower return. So we put 11 on the low side, because if it does poorly and we still make 11%, we're gonna be very, very happy.
Yeah, that's great.
We put 13 in the middle and 15 on the high, because as we made higher assumptions, we need a larger margin of safety. And the higher desired return, the more margin of safety is in there. Now we hit the analyze button. That's what we came up with, guys. A low price of 45 to 55, high price of 105 to 123, a middle price of 71. Don't go away yet. I want to show you guys what intrinsic value in this company is based on 10% return across the board. So basically, I'm valuing the company on the low side of 48 to 60, high side of 150 to 180, low side, middle side of 90 to 106. That's where I value the company based on a 10% return. And as you can see, if you buy the company today at the current price of 64 and the low assumptions occur, 9.3%. High assumptions occur, you're going to make 25%, middle 17.5. These are very high numbers, but again, do not buy it just because what we're saying here. That's absolutely not a good idea. So guys, thank you very much. Check out everythingmoney.com for our software. It's a little over $1 a day. You can do this for 10,000 companies out there. Thank you for your time.